Hey, welcome back to the show, everyone. Jeff Smith, your host, and excited to talk to you today about being a mortgage broker. And today, I want to keep this fairly simple and go through what I believe are the three top reasons why you should be a mortgage broker versus a mortgage banker or working at a depository bank or any other kind of institution where you can do financing for mortgages. And so the top three reasons I believe that being a mortgage broker is the best place to be is number one, client perception as it relates to interest rate and fees, and then actually having the lowest interest rates and fees. So those two go hand in hand together. The ability to shop rates with different lenders, and then higher commission. So let's break down each of those three and why I think they're so important. So number one, within the industry, we know that brokers have lower rates and they have lower fees compared to independent mortgage banking companies, compared to most of the depository banks, and compared to most of the, I would call them centralized direct lenders like a Rocket Mortgage. So mortgage brokers have this advantage when it comes to lower interest rates. And like at my company, for example, I don't have any flat fees that I charge. So most mortgage companies charge a flat, they usually call it an underwriting fee or a processing fee, somewhere between $1,000 and $1,500. So at my company, I can get access to the lowest rates by shopping with different lenders, and I don't have any lender fees. So right off the bat, that's a huge savings for my clients. And that can be measured against any other lender. And consistently, I've got some of the best pricing out there. So that is real. Now, what I think is even more of an advantage than the fact that I do have the lowest rates and fees is that I can explain that to clients, and clients understand what it means to be a broker. So clients, even if they haven't bought a mortgage before or financed a mortgage before, they've worked with brokers in some other capacity. A lot of times it's insurance brokers. So they've heard of the broker model. And so when you tell someone that, hey, I've got over a dozen different lenders that I can shop rates with, I have a system that will run your scenario, and then it's just going to tell me who is the best price lender that fits your specific situation, they inherently trust your ability to get them the best rate. They also now know that you are shopping for them on their behalf. So that's saving them time and work. Now, everybody wants to shop for their mortgage rate and try and get the best deal they can get. That's just a smart thing to do. But if you can go to a broker who can do some of that shopping for you, now you're saving time and you're saving money. So that's huge, because what happens then at that point is a lot of clients don't shop rates after that. If you tell them that, hey, I'm a mortgage broker, I'm going to run this through a dozen different lenders, and I'm going to price you with the lender that's got the best scenario for you, they're significantly less likely to shop around with different lenders and get lenders in their ear telling them this and that, and now you're having to compete with other lenders for the deal. So that built-in understanding and trust from clients of what it means to be a broker, I think is just as valuable as actually being able to shop and get the lowest rates and fees. So when I have that conversation with clients up front, it sounds like this. Hey, Mr. Smith, I just want to tell you a little bit about my company. I've been in the mortgage business for 18 years. I started my mortgage company, Tiger Home Loans, last year in October as a mortgage brokerage. And so being a mortgage broker gives me the ability to shop rates with different lenders. So I've got over a dozen different lenders that I send loans to, and I'll be able to run your scenario through a system that prices all those lenders at the same time. I'm going to select the one that has the lowest rates and fees that fits your scenario. So you're going to get access to some of the lowest rates in the marketplace, and I'm going to place you with the lender that's giving you the best deal. On top of that, I don't have any flat fees that I charge at my company. So most mortgage companies charge a flat overhead fee. They usually call it like an underwriting fee that's between $1,000 and $1,500. Like the last company I was at had an underwriting fee of $1,495. I don't have any flat fees at my company that I charge. So I can save you, over $1,000 in closing costs in most scenarios. and I can get you access to the lowest rates in the marketplace. And some of the lenders that I place loans with, the only way you can get a loan through them is through a mortgage broker. You can't just go directly to them. So when I give clients that speech, that gives them a huge amount of confidence that they're getting a great deal financing with me, and it significantly reduces their need to shop my quote with other lenders. They'll do a quick Google search, see if the rates I'm quoting them are lower than what they see on Google. They almost always are. And once they see that, then they're basically good to go. Now, if I rewind to the last mortgage company I was at, we did not have competitive rates and fees. We had a $1,500 flat fee and we had high rates. So every time I was giving a quote to a client, they were Googling mortgage rates and they would find that Google pulled up rates that were lower than what I quoted them. And then now they're questioning what I've offered and they're going out in the marketplace and getting quotes from other lenders. And so I would talk to a ton of clients. I would do a significantly fewer number of closed transactions because clients would meet with me, they'd like me, they felt like I was going to do a great job in the process, but then when they saw that my rates and fees weren't competitive, it prompted them to go shop, and then I lost tons of deals. So that is a humongous advantage as a mortgage broker, and my lead to closing ratio has increased significantly since opening my mortgage brokerage. So number two, let's break this down. The ability to shop different lenders. So, we just talked about why shopping different lenders can give me as a mortgage broker access to lower rates. Let's now talk about some of the advantages that being able to shop different lenders gives you from a perspective of putting deals together. So number one, different lenders have different underwriting philosophies. They have different underwriting management, and they have different products. So let's take just the underwriting management and philosophy side of this. So I had a client earlier this year, actually, who, it was really at the end of last year, without giving you all the details of the situation. Basically, she was moving from out of state to Arizona. She'd been working for the same company for 10 years. And with that move from where she previously lived to the state of Arizona, they switched her from a W-2 employee to 1099. So she became an independent contractor. When she applied for a loan with me, she had only been an independent contractor for 4 months. And most, the guidelines give some gray area with this for a VA loan, but most lenders that I took this loan to wanted to see at least 12 months of history as 1099. Some lenders wanted to see 24 months of history as 1099. 1 out of the 7 lenders I have that offer VA loans at that time reviewed that scenario and said, actually, we would consider this at less than 12 months if you could get us A, B, and C. So we got that paperwork. We submitted her file into underwriting upfront before I had given her a pre-approval letter. We had the file reviewed with all that paperwork in it, and then we got the conditional approval. So then I was able to give her the conditional approval letter. She went out, shopped for homes, found a home, went under contract, and closed. So that, of the 7 lenders I had at that time who offered VA loans, 1 out of the 7, the underwriting manager looked at the scenario, said, yeah, that makes sense to me. We'll do it if we can have a few additional documents to go with it. So if I was not a mortgage broker, the only way I would have been able to do that deal is if I just got lucky that the company I was at had the 1 out of 7 underwriting managers who said, yeah, that deal makes sense to me, and I was able to get it done. But the chances are that I wouldn't, and then I wouldn't have any other outlet to send it to. So when you work directly for a mortgage company, you've got the one outlet of the underwriters and underwriting management that you have at your company. So being able to shop around can help you to get more deals done in those types of scenarios. It can also help you get more deals done just by the fact that you can get access to so many more products. So as a mortgage broker, I can sign up with any lender I want to sign up with. My company's in good financial standing. I meet the criteria for every company that you could sign up with. And so if I ever feel that I don't have a product that's important for me to compete in the marketplace, I can just find that lender, sign up with them through their wholesale channel, and now start to send loans to them. It's just as easy as that. So I have access to a huge suite of products as a mortgage broker, which gives me a big advantage. And it gives me the flexibility to get products that work for my book of business, as opposed to being at a big company. I've just got the products that they have at their disposal. Now, the most mortgage banks, like the last mortgage company that I was at, we could broker transactions. But the problem is the independent mortgage bankers, their process for brokering is really tough. And when you don't practice it, it's usually a nightmare when you try and broker a loan. And so the experience brokering loans as an independent mortgage banker is much different than it is when you have your own mortgage brokerage. It's so much easier when you have your own mortgage brokerage and you're working with companies that specialize in wholesale lending. So yeah, technically, if you're at an independent mortgage bank, you have access to broker out to, usually these companies have, 10 or 12 lenders that they're approved with to broker to, but the experience is so poor that any time that I've done that in the past has been a nightmare and really not even worth doing anyway. So you have more flexibility from a product perspective, more flexibility to get deals done. Number 3, okay, with all of that, if those weren't the big enough reasons as to why being a mortgage broker is so advantageous, you earn higher commission as a mortgage broker on top of all of this. So not only do you have better rates and fees, you have more products, you're making more per loan. So my average commission per transaction has gone up significantly. I was making roughly 130 to 150 basis points at the last company I was at. Now I'm making, netting like 200 basis points. And so it's been a significant increase in pay while providing a better product for my clients. And that to me is the important part. It's like, I don't want to just make more if I'm gouging my clients. I want to provide a really competitive product for my clients. And if I can make more while doing it at the same time, then it's a win-win for everybody. And that's the case being a mortgage broker. So when you're a mortgage broker, whether you own your own brokerage or you work at a brokerage, you're most likely going to be an independent contractor. And so that gives you some tax advantages as well. You can write more off than you can write off just as an LO who's W-2'd at a mortgage banker. So that gives you some tax advantages to help shield some of that income that you're earning, because hopefully you're earning a ton of income. But having higher commission per loan means that you can do fewer loans and make the same amount of money, so less hours to make the same income, or you can continue doing the same number of loans and earn a higher amount of money and significantly increase your income, which has been the case for me. And so, the nature of it, what I've found after being a mortgage broker now for almost a year, next month will be my 1-year anniversary as a mortgage broker. My quality of client that I work with now has gone up dramatically. So in the past, the A-paper clients, when the companies that I was at, the rates, they ebb and flow, right? So sometimes rates, when rates are going down and rates are low, there's not a lot of margin compression, and the rates between companies get fairly similar, and there's not a ton of rate shopping, and so the rates aren't as big of an issue. In an environment like we're in right now, where rates have been rising, there's a ton of margin compression, and it's very competitive, and pricing is a huge issue. So during those environments where rates are going down and the pricing's not as competitive, if you're at a company that doesn't have the lowest rates, you're still getting a lot of A-paper clients because the rates are good. Clients aren't having to shop as much because the rates are going down. They're excited about the rate they're being quoted. And so you can get the deals for the better qualified clients. When rates move up and we're in a market where there's a lot of rate shopping going on and margin compression, then it becomes much more difficult to get the well-qualified A-paper clients unless you have great rates, because it's just so easy to shop rates these days. All you have to do is jump on Google and Google what are mortgage rates today, and it's going to spit out a whole bunch of options. And so if you're not quoting rates that are in line with what consumers are seeing online, you're very unlikely to get the savvier buyers to go with you for a transaction. So what ends up happening is the people who go with you oftentimes are the ones who are struggling to get approved for a loan. And if you can figure out a way to package it and put it together, they don't really care what the rate is because they're just excited to get approved. Well, those types of deals, unfortunately, are the hardest to close because they're clients who barely qualify. They usually have a lot of things going on in their finances, and so it's a very cumbersome, time-intensive deal to get done. For me, as a mortgage broker coming up on 1 year, my clientele now has significantly increased to where I'm doing mostly A-paper loans. And the great thing with A-paper loans is they're easy to close. The clients are well organized, they're well qualified, they don't have tons of different things going on that you've got to address. They're usually clean, simple files to close. And whether the file is really easy to close or really hard to close, you get paid the same amount of money either way. So when you're 100% commission like a loan officer, you want to close those files in as few hours of work as possible. And so the higher quality of client you have, the less hours it takes per deal to close. And so for me, that has been a night and day difference as a mortgage broker. Now I'm doing deals for all of the A-paper clients, and they're so much easier to do. I think this is one of the easiest years I've had in terms of the quality of deals, getting them done. It's also been an easy year because there's just not as many deals to do right now because the market's been so difficult. So that's part of it. But even if I was doing a lot more deals, it's taking me so many less hours per deal to close because the quality of clients is so much better. So those are three of the top reasons why I think being a mortgage broker is a huge advantage. And there's lots of other reasons as well. Those are just three of them. But if you're in the mortgage business or you're considering getting into the mortgage business, I highly, highly, highly recommend looking at the mortgage brokerage side of the business. It's a great place to be. There's just so many options. You're going to maximize your number of deals you can get. You're going to maximize the amount that you make per deal. And your clients are going to love you because you're getting them access to the best rates and fees. And everybody wants to save money and get a good deal on their mortgage, right? So when you're that conduit, you really build a lot of trust with your clients, and it's easy to build a book of business. Hope you're doing well. Thanks for tuning in.